The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing well on a Friday morning here. And you have a good weekend after today's trading. We've got a big report coming out this morning. You guys know about that. We're going to talk about it real time as it's happening around 8:30. But you guys are getting up late this morning. I could understand. That was a fireworks show last night. It was nice for me to see Trump kind of get called out on some things. I thought they were a little bit unfair to him, even though I'm not a huge fan of him. But his reactions are quite interesting, to say the least. And again, thanks for getting up early if you guys watch that. Interestingly enough, the Bank of Japan has come out with some comments really saying they're kind of happy with the way things are going. The inflation rate is expected to hit their target, blah, 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 blah. And normally that would mean a little bit of a hit on the currency as far as devaluation goes. These are real-time prices I'm showing you on the Japanese yen. We do have a hint at the same time of this orange situation here happening on our daily. And what does that mean when I say an orange situation? That means our current day bar on the current day, is turning yellow or orange. And what does that mean? That means we could have by tomorrow a new profile appearing up here, which will give us new support resistance areas, and actually is a sign in itself that may be able to be looked at as a little bit of a target rich environment for the North trade. Now, what does that mean? That means that, and as I look at our scanner, I'm going to show you this. You didn't have to have our charts and indicators and all that kind of jazz to know this. Here's the USD JPY down below. And if you see that on your currency grid, this yellow peel back, that means that, and I'm going to go over here to my TAS says button here, and it says, trend is favorable along, blah, 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 blah. It says targets may have been met in the interim and trading range could be developing in the uptrend. All right, so that will kind of put that in the forefront of with that fundamental news and the technical reasons there, maybe hitting somewhat of a target situation on the yen for just the short term. But the thing I like about this is we really are for a continuation pattern and just maybe being able to add to this position alongside when that profile appears, depending on where the support levels are. If the profile appears below, it's just completely spot on for the continuation trade with this consolidation, classical consolidation pattern that may be developing here. But that fundamental news really should have driven this currency down a little bit farther, or strengthened it, relative to valuation. It's not. So what am I doing with this right now? I'm looking at it as, you know what? Let's take the money right now. Let's sit tight. Let's wait for a new profile. And let's be really, really happy to see some new levels, maybe a little bit lower on this new profile that more than likely will be appearing. And here's the situation on the long term on the yen. Just lovely. I mean, you can't complain about this. And here's the 240 situation. So again, I like it, but we got to take that for what it's worth, and we got to look at what we're seeing on the automated text, and that's the way that ball bounces. All right, so that being said, let's take a look at the euro. Again, excuse me, on the U.S. dollar. Sorry about that. We have met some targets up top. We talked about that. 98.31. It's interesting how that happened, but again, we have a very wide profile. We've got a POC here that we're kind of rattling around above, around this 97, 75, 76. And what does that mean? That means that I don't want to short the U.S. dollar. And I'm looking for areas to buy support, and I like how this is holding up right here around this inflection point. So what do? Again, I think you wait for breakouts above 98.31. And short-term traders, you've got something around here, 97.75, 97.76. And why is that? That's coupled with our unfair highs on our 240 relative to that POC also on the daily. So let's go into the scanner and let's kind of like analyze this a little easier, because I think this makes it pretty easy. So I'm going into, I hope we've got the US dollar in here. I think sometimes I forget where we have things. Okay, so here we go. Here's the landscape view. As you can see, that POC at 97.75, and then you got that 97.72 sitting there. So could look at this as a little bit of a short-term support area with this, but valid breakouts above 98.31 up top are going to kind of be off to the races again on the US dollar. That will be the more valid trade, but you got a kind of a reason here to do a little bit of a support trade right now. It's not the best support in the world, but a wait and see attitude would be the long-term prudent thing here. Guys who don't want to miss the trade, I think you got some support here right now. All right, so what do we got here? Let's take a look at the S&Ps. Obviously, no mystery to anyone. We had a little bit of a pullback yesterday. That was lovely also. So we, the day before and the yesterday, actually day before yesterday and yesterday, we talked pretty religiously about this 2102, 2104 area. That was a POC on the daily, unfair highs on the weekly. And we talked about initial targets, 2085.50. And we also talked about closes below. So in my opinion, taking everything off at one time, you want to leave something on for the long-term trade if you've been adding and scaling into trade. So right now you should still have something on here. These are big inflection points on the long term, and these are C changes that have been happening on the long term, on the scanner, on the breadth. And I'm going to get back to this. These weeklies, and again, we're going to kind of blow this up a little bit here. These weekly crossovers. Remember, we started this process back in May 29th into June 4th, and we've been looking at the broad markets as okay to be short, not okay to be long for the first time in a long time, and looking for those inflection points. And these particular crossovers are primarily based on weekly closes, but we do a daily update on this. But we're still long-term breadth negative relative to these profiles. And the reason I'm saying all this is, you got some decent inflection points that lined up lately. You guys put the short trades on, hopefully. You put the stops in, of course, hopefully, always. And now you're getting the move in the direction you wanted. And, things are starting to cooperate, and we're starting to break down below some levels again. I know being short this market hasn't been the easiest thing in the world the past, year. But, we've waited patiently. The risk is to be long. Your next target now is 2060 as it was before. And we could have a nice situation here on the S&Ps where we could break down even farther, but you got to keep your eye on these situations to kind of regulate that trade. And also now, with some of the things that are going on with the stocks and having the just some real serious reactions on the downside to not so such bad information, I might add. The Apples of the world are this has been the thing that has elevated quite a few, the NASDAQ and the S&P basically on its own. You got a new profile attempting to appear down below, as evidenced by this on Apple, this this peel back yellow thing right here that we're looking at. And that's a little bit of a target situation on the downside for Apple, but some of these stocks are coming off that have been leading the pack. And if you look at the breadth, what does that mean? That means that as we look at these things, we're just starting to crack here on the daily. The weekly's been pretty much negative, and some of the other indices are rolling over. You've got a big report this morning, but I think the leverage is on the short side finally. And what do you do with this right now? I think long-term, now you can lower your stops a little bit. Long-term shorts on the S&P could put stops in above 2085.50. Here's the situation on the 240. That 2084.5 is sitting there, 2085.50. So you got, two time frames that you got to pay serious attention to. I'm gonna go back to my futures in the scanner, and I'm gonna pull up the S&Ps, and basically that's kind of the area we're looking at, 2084.62 and 2085.50. So that's kind of stops above there. The report, you could have some weight on before the report, but again, that's going to be watched pretty highly in about 13 minutes. Notes and bonds obviously going to react to this. They could react violently. I'm going to suggest just kind of sitting tight here. If we get back above 127.11, 127.14, those are weekly up for lows, daily up for highs. We could be off to the races again on the upside. And as we look at situations like that, we always want to trade the reaction, not the initial action. So I would suggest just kind of letting the thing do what it's going to do, and then assessing where we are relative to profiles. On the downside, breaking below 126.16 is going to be pretty damaging. A daily close is going to predicate possibly how the trend change on the intermediate may be looked at. But again, I'm looking at support at 126.16 and breakouts above 127.11, 127.14 on the notes. All right, cover a couple of things before this report we need to talk about. We talked about crude oil. There's zero reasons to take the short trade off still. We've been talking about that. I know that sounds insane. Can you short it in the hole? New resistance at 45.45, and yes, you can short this in the hole. Things on the lows go lower, and we've been talking about that since 60. There's 60. Actually, there's 60, that general area. So that's the way that bounces. Let's take a look at gold really quick. Actually, let's move this to, are you guys trading August still or September? Or December? What are you guys trading on gold here? Got a couple of choices. Let's see if I can get my situation here right. All right, let's look at December. Steve Rhodes is notifying me of that. We're going to look at this when we come back from break, guys. We'll be back in just a little bit.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Just want to commend John from Philadelphia alerting us to this situation on September wheat. I hadn't looked at this in a little bit, and we had gotten right back down in this 493 area on a pullback. Navigator making higher lows, price action making lower lows, and we're probably going to cross the zero line on Navigator. I think this is a relatively low risk trade. Here's the daily. Talked about targets 524.5, 525 up top. Still feel really good about that over the intermediate term, and again, stops below 493 on this trade. You could move up your stops on it. 501, new box 240s, but again, that's what these next level down profiles are, great for trailing stops and to basically kind of regulate the trade. We talked about that all the time, but thanks again for that. Beans, November beans, new crop. Again, that was September wheat. This is the situation on November new crop beans, 955 still up top. Stops above. I feel like we're going to rattle around on here and at least explore this fair auction again fully. 910.5 down below, and I really like the reasons that we're staying down here, and relative to this profile that's appeared above price action. And again, you can get all this information in the futures section of the scanner. I'm going to go into new crop beans, which is what we've got in here, and there they are. There's November. There's the inflection points we just spoke of, 955.5 up top, and that's on beans. And then the wheat trade. This is September wheat, and there's that 493 area on wheat, along with 497. And there we go. All right, so we got a big report coming up probably during the break, and what we're going to do here. Sorry about that. Somebody was trying to get hold of me. What we're going to do here is we're going to take a look at Treasury notes one more time. And we're going to take a look at the September 30-year really quick. Getting a little bit of movement on the north side here, pre-market. This is our 240 starting to break stride here a little bit. Here's the situation: 127.14, 127.11, that DMZ up top, and then you got the 126.16 down below on the daily. So I'd more than likely wait until we got either above 127.14, 127.11, or came back into 126.16 and then below. So those are your big levels, if you will, on the 10-year. And let's take a look at the 30-year really quick. And here we go. So 160.20 up top and 156.04 down below. Those are the big levels that we're looking at. 156.04, 156.07. That's going to be big support on the 30-year. And then targets up top on the north side, 160.20. All right, let's take a look at the S&Ps really quick. Again, going to have some action on this and the NASDAQ. 2085.5 up top and 2073 down below, but more than likely the 2060 is going to be the bigger number. So you got a pretty good range here. 2085.50, let the market come to you. 2060 down below, let the market come to you. Short-term traders have got 2085 ballpark up top, and then the 2073 down below. So again, we're kind of in no man's land a little bit here still, but I'm going to probably wait and start looking at taking off some weight around 2060 if we get down there, and I'm going to use 2085.50 right now as based on a noise level of about 7 S&Ps above as a stop on this one. Remember, 2093 is a big number too, so that's going to pretty much satisfy that. The numbers on gold, we're going to take a look at that really quick before the report. This is December gold, still in a downtrend, rattling around down here. 1081, inflection point down below, 1111, 1112 up top. That's what you're going to be waiting for. Any breakdowns below 1081, in my opinion, are going to have to be sold on gold. Let's go back to the NASDAQ really quick. The numbers on the NASDAQ, the September contract. You got 44.63 down below and 45.60 above. Here's the very short-term numbers, 45.13 and 45.45. So if you're looking to trade some kind of ricochet action after the announcement, those are the levels you need to wait until we gravitate to. And if we start breaking down below 45.13, we could easily see 44.63. Guys, we'll be right back.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Obviously, the report's out. Some guys in the den are putting out some information on that. If you've got access to it, or don't access, actually, if you don't have access to the den, please do yourself a favor. If you're watching eSignal right now on the eSignal network, go in there and get you a subscription to the den. Some damn good guys in there who are making some great comments all the time. Gold, this is kind of, we always like to wait for these things to come out and see how the reaction is. This is a the edge of the cliff for gold, if you will. So we start racing below these 1081 areas on the December contract. This is going to be, and you can test drive the den absolutely free, by the way. It's not an immediate subscription. I misspoke a little bit there. 1081, again, I think you just got to wait here. I'm not a big fan of buying bounces on gold right now. This is kind of going to be one of those flush moves, I feel. Remember, we always talk about these things sometimes don't turn around so easily. There's no free lunch. Sometimes you get one of those flush moves, and when it's so painful, it hurts on the longs. That's when they usually start turning some of these instruments around. Let's take a look at silver really quick while this is going on. Here we go. Yeah, again, this, kind of sell resistance on both of these things. We hit a little high this morning, 1478. We hit a high this morning of 1479, and the unfair highs are 1478. So again, I think we satisfied some short-term resistance. That's the situation on the daily on silver. Let's hit the September 10-year. Interesting how this works. Decent news for this unbelievable economy here in the U.S. and That's why we always talk about trading the reaction, not the action. We get right up into this 127.14 area. I think we reached out 127.15. This is our daily inflection point. We talked about waiting for that 127.11, 127.14 DMZ up top to be hit. Market came to you. I'm not a big fan of shorting treasuries, so that's something I was not interested in doing. And I'm still not interested in shorting treasuries. But again, it kind of confirms that that may be a little bit of a lid right now. But here's the 240 on the 10-year. Just waiting for support to be found. That support's going to be around 126.16 now. And if we can break out, especially on this type of action, break out past 127.14, then I'm going to be a buyer up there. So kind of in no man's land. It's Friday. It's not extremely directional right now, so may want to just sit tight on the 10-year until some of those numbers are breached. Here's the situation on the S&Ps. Obviously was looking for better news here, and we talked about waiting, sitting tight on the rest of the position to see if we could get some resistance to sell or breakdowns to sell more. We caught those big numbers off the long-term leverage, off of the breadth we were looking at, that 2102, 2104 area. A little bit of a target, 2085.50 on the short term, but it's nice how we closed below and routed around. And we talked about not being very interested in buying this product on any dips right now. 2060 is your target down south. And remember, this is pre-market. A lot of things are going to happen pre-market. When the stocks open, our internals are going to tell us a little bit more. That, remember, this is as of yesterday's close. A lot of these stocks aren't opening yet. And if you look at our weekly, again, if you joined the show late, this is kind of what the score is here. Long-term breadth is negative. All the calculations are there. The 60 minutes closed negative yesterday, and obviously is going to stay negative this morning. I love this down to 2060, guys. I know we had a big day yesterday, but I like how this is retracing back into the lows of yesterday. Here's the situation on the NASDAQ. We talked about this one, 44.63, and breakdowns below 44.13. They're going to have to be sold. 44.63 is going to be your target down south for a little bit. And here's how this looks on the short term, breaking down below 240s again. And again, all these numbers I'm showing on the charts are in the scanner, just reminding you guys of that. Let's take a look at some things that I'm going to pull up the scanner to look at this real quick. Here's the ETF situation. That's the long-term weekly. This is the daily. This is how these things closed. So, again, the weekly and daily, a little mixed up on the ETFs. I'd love to see these things start showing a lot more red, especially on the daily. The XLE, obviously, this is something to stay away from altogether, pretty much, even though we did have some green shoots yesterday. Some of the XLE stocks starting to turn around. I still think you got to sell resistance on those. Let's take a look at Disney really quick. We talked about this, in fact, either yesterday or the day, I think it was yesterday or the day before. We said, we're kind of we're breaching. It was nice because, as this thing was getting cratered, initial reaction was below 111. I think we're trading like 110 and some change, or maybe 111. We said, we can't really look at this as any type of dead cat bounce situation until we got down to 105, which are those weekly unfair lows. We got down as low as 104.24. So got a nice little $3 or $4 bounce off of that. But again, I think you're playing with fire on this, and a weekly close within the balanced area. Now you've got killer resistance at 111.5 on Disney. And you'd really want to see a new profile appear here on the daily to get some even lower inflection points to sell on this particular product. So that's the way that works. Here's Apple. We still don't have any new things showing up down here yet. We've got something in the scanner showing on the daily, a little bit of a hint on Apple. But again, to regulate the trade up, to regulate the trade down. We really want to see that profile appear and lock in. That hasn't happened yet. And then we're going to have some new levels on Apple to pay attention to. Let's take a look at natural gas really quick. And again, kind of going up into that resistance area again, 22.824. Can't seem to get through it. I like this trade. Just consolidating, and possibly looking at this with targets down below 2.646. Breakouts above and closes above 2.824, though, all bets are off on the short side. And I think, we've got to kind of look at it like we did before, or I'm sure John in Philadelphia was looking at before, above this 2.824 area. But again, kind of going back in time, it's non-directional at best. I think you got to be kind of willing to take profits when you can on this. There's not a lot of long-term trend situations in force on this particular product, in my opinion. All right, we're going to go into the scanner really quick. We're going to get back to the S&Ps here. We're going to pull these up. Let's look at the daily. Okay. We're just going to look at the same drab situations here. Again, I know it's probably boring to you guys to keep showing things that are just stocks that won't get out of their own way. These are the ones that, if the market does happen to rally, which I'm not a big fan of that happening, are going to be the least painful situations if the market does rally, and theoretically will be able to fall apart a lot quicker when the market falls apart. Best Buy, that's been on the radar screen. Bed Bath & Beyond, these are things that are still sitting as ugly situations. AMAT, CBS Corp, showing some green shoots. Let's take a look at that. All right, so again, a little bit of a move up here yesterday, but the cool thing is this on CBS. We've been in a downtrend. We're having kind of a wicked bounce here this week. I think the market is, and we always talk about waiting for the market to come to you, and now we're getting back up into those inflection points, 52, 56. We had the breakdown. We had some, news-related stuff on CBS, but right now this is really, really cool because we're getting back into that inflection point again, 52, 56. I think the market's going to head south in general, could drag these things down, and now you've got a good resistance area to focus on with stops above, and you've still got even a higher resistance area, 54.79. So depending on how you're looking at this from a trading plan standpoint, picking a battle at 52.56 on CBS Corp, or using 52.56 into 54.79 as a collection area for shorts is not the baddest thing in the world, in my opinion, for long-term traders who want to get a little bit more juice out of this. This is kind of the writing on the wall on the long term, and considering that it's underperformed the market going sideways on a relative strength standpoint, we may, if the market pulls back like we think, we may have a decent opportunity here still on the short side. All right, let's get back into, let's take a look, kind of a similar situation as far as profiles go. Denbury Resources. Now, these are stocks. What's the symbol on that? DNR. Showing some green shoots on the shorter term time frames. Long-term trend, obviously, it's a $3 stock. Forget it. Sorry about that. I hadn't seen that one in a long time. Kohl's, KSS. Let's take a look at this one. This is the eternal problem. We're going to take a look at Michael Kors in a second. Obviously, some earnings on that. Surprised everybody. Kohl's, we've talked about 63.05. We talked about 63.05 quite a bit as a shorting opportunity on Kohl's. Still like that with stops above. We're trading 60.35 pre-market. 63.05 into 63.36. I still think you're safe on this one. 60.74 short term resistance here. Okay. As we look at this, keep going down farther. Level 3 communications, LVLT. Let's take a look at this one. This one's been on the short list for a while. If you guys have been watching this show. Here we go. LVLT had a big move down yesterday. This has been kind of the close below retest. This is when it got on the radar screen, 52.98. We're trading 49.08 right now. And what do you do with it now? Here's the daily. In my opinion, you've still got some downside movement here that you can take advantage of. Short-term target's 47.66 on LVLT, but I like this on the long term, just hanging on until we get new profiles appear on the daily for new targets on the downside on LVLT. Marriott International, let's take a look at what's going on there. MAR, it's one we talked about yesterday and the day before. Had kind of a sea change, just want to follow up on it. Again, nothing happening, a little bit of a bounce up. Slight movement up at the end of the day. I think this is going to be one you can hang on to till around 60 on Marriott International. Let's go back to our sword here. T. Rowe Price. I mean, these are, I hate to keep beating a dead horse. These are ones that we've been talking about that are just, again, the market comes off and the stocks that have shown their hand early, we've been talking about, it just really worked out quite well. Whole Foods Markets, T. Rowe Price Group, Verizon's been on the list lately. Wyndham Worldwide, Wynn Resorts, ExxonMobil. Let's take a look at this one. A little bit of a rally yesterday. Here's the situation on ExxonMobil. We, identified this as a stock that was underperforming in the XLE and oil. When it was rallying, showed its hand early. We're able to sell these resistance points. We're 12 points lower right now. But what do you do now? I don't think this is on sale. I mean, this is something where you at least want to see some new profiles appearing down here to get any new type of situation where you can take this trade off. But again, it's not on sale. It's not one to be bought, in my opinion. Let's take a look at WYN. Wyndham Worldwide. This is one that's, we've been talking about this one. It's showing its hand early. We're $79 now. This has been something we've been paying attention to. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Here's the U.S. dollar. Looks like we're going to have another breakout here on the upside, 98.31. Then we got that 99.50 target above that. Pay attention to it. Dollar liking what's going on with that report and the action in the treasuries. Here's the situation on IBM. Been kind of talking about this. It's been in the scanner along with T. Rowe Price, a couple other ones that we've been hammering. Here's the situation on IBM. Just love that action. I love this going down below 150. Here's a weekly. Why 150? Those are the recent lows. Don't talk about that a lot, but I think that's going to bring some people to a scratching head position on the long-term investor on IBM, and then we're going to do a flush, and we're probably looking at getting some people out of that stock finally. Here's the situation on the S&Ps before we go to Larry later after this last ending of the show here. Here's the situation at 2073 down below. This is 240s. You've got resistance at 2084, 2085. Again, I'm trying to stay with some of the long-term position on the short side and being able to add to it 2085, 2084, 2086. A little bit of a noise level around there. Going to have to pay attention to. 2060 is going to be my targets. Again, this has been a difficult market to short for the last 6 years, but again, we're kind of taking the barometer of the breadth situation and just trying to play the odds here. And it's okay to get stopped out sometimes. Take some profits when you can. Try to keep a core position on situations like this and maybe play around with scaling in and scaling out of some others. We're going to look at Procter & Gamble really quick. It's been something we've been talking about on selling resistance as it we talked about this 81, 82, get back down below there, being able to sell that. Now we've got some really super confirmations on the short side. And the cool thing is the stock showed its hand early. It's been a weak stock. It's been breaking down on the, here's that close below retest on P&G, 80.72. Now what do you do with it? I still don't think you try to go long this stock. Here's the regulation of the trade down. There's no new profiles. When we get a hint of a new profile appearing and locking in on Procter & Gamble, maybe a contra trade situation that's developed. But remember, this is a weak stock in a market that at its best gone sideways, and we're still looking at it that way. Let's go back to the 10-year before we close the show. We got a big report, obviously, that's come out. Here we go. Sitting just kind of banging around in the balanced area here of the fair auction on our daily. And remember, this, we've kind of we've come up and gotten away from this 27.11, 27.14, especially today. But again, I think these bonds and notes are holding up relatively well. And I'm looking at this as buying breakouts again above that 127.11, 127.14. Here's the 30-year up a little bit. Talked about support around 156.04, 156.07. I think we hit on that report. We got down as low as 156.12. So again, staying above profiles on the daily. This is the 30-year September. And, again, it looks like things got Teflon on it. It may go higher, therefore rates going lower. Why? Who knows? And the S&Ps are rallying pre-market. We talked about watching out for these pre-market moves, but I think you've got a really good situation around 84, 85 up there to lay some wood to this thing. Guys, be back Monday. Larry's next. Stay tuned. TFNN all day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.